Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. Tomorrow is FOMC, guys. SPY managed to intraday get to a new all-time high, but we didn't get that all-time high close. But it's alright because tomorrow the real move is coming once FOMC data drops and Uncle Powell speaks. It's going to be fireworks. Volatility incoming, big move incoming. If you never traded FOMC before, I recommend watching and observing and learning. If you have, you already know what I'm about to say. Tomorrow is not the day to fuck around and find out. Okay, the market, anything can happen. All right, if you are a bull bias trader and the market drops, you're gonna get cooked. And if you're a bear bias trader and the market goes to new all-time highs, you're gonna get cooked. The market can do anything and we have to prepare for anything. That's the point of being a sheep style trader. We got to know the levels and setups and trade it unbiasedly. What levels do I have? I have 563, which served as a strong resistant level on Friday and Monday earlier this week. Today, the market spent some time above it, but couldn't 100% defend as support. It did manage to close a little above it, so I mean it's just tough for me to call that a breakout. It's so pathetic. Either way, if we are below 563 and FOMC and Uncle Powell starts speaking at 2 p.m. Eastern time tomorrow, 2:30 Eastern time as well, and we start breaking down support 561.5, 560, guys, we are dropping 558.5. Those levels fail. 557, 555, and 553.4 are in play. And if we lose those levels, 555 and 553.4, Uncle would be bear bias at least for a retest of the 50 daily moving average, which is around 550. And if that is lost, extremely bearish, at least until all the way down to 540. And below 540, we could have a massive M pattern playing out. My recommendation, guys, is take it one level at a time. Okay, you get in position, get your level to level trade, and swing the runners. It's just my recommendation. Now, that's the bear case scenario. Bull case scenario, get above 563 and 565. Very simple. Not easy, but simple. We just got to watch the price action and react to it unbiasedly. This is not about predictions. This is about reacting to the price action. So overall plan, price action wise, is the same. Only difference this time is we got FOMC tomorrow, so I think a big move is coming. Triple Q, same situation. Didn't quite get the breakout of the green downtrend line. Okay, it has to close above 576 to give us that breakout. All right, where did it close today? 473.49. So there is a fib level at 472.7. Didn't quite break that down, but if it does, I would lean bearish in favor of pullback, a deeper pullback to the downside. Otherwise, bullish above 476 and 478. Tomorrow could be the day we are going to get a massive pullback to the downside now that we got the third test of this downtrend line, or we get the breakout. React unbiasedly if you guys want to make money. If you don't, continue to trade biasly. NVDA, lower close than we had in the previous day. Still managed to close above. Well, actually, it broke down to 116 level. Okay, so that's overall bearish right now. But with the real move incoming tomorrow, can this breakdown stay intact and show a lot more follow through, or will it recapture? No longs or calls unless NVDA recaptures 116 and clear 118. If that happens, especially with FOMC backing it up, look to long. Play it level to level and swing the runners. If we stay below 116 and start breaking down 114, 112.5, and 111, look to short. We are going down a lot lower. Okay. Here is Tesla. Didn't quite give us the breakout. Okay, it did manage to go pretty decently high. Got a few cents shy of my 235 level. Didn't quite get there. But once again, that 226.5 fib level held as support. So if you are bearish, look to short tomorrow if 226.5 and 225 fails. Those are your triggers for puts. And as far as being bullish, 228 and 230 still must clear. Today, if you longed it and played level to level, you should have been all right, unless you try to hold longer than you should have, which is screwed, by the way. Then you might have been screwed. That's why level to level is so important, guys. So you clear 228 and 230, play it level to level, swing the runners with a stop loss, of course. And if we break down 226.5 and 225, look to short. Real move incoming tomorrow, guys. IWM higher close, managed to hit a fib level around 221.8 and rejected. Real move incoming tomorrow. Big move, big move. So if the big move is going to be bearish, 218 and 216.4 must fail. If both those levels fail, 215 or lower are in play. If it's going to be bullish, then 219.7 and 221.8 and 222 must clear. All those levels must clear for higher highs. Okay, now let's take a look at the flows here. You guys know my filters. If you're new here, I check for 100K premiums or above. I look at all deltas. I only look at above the asking price. I look at only the sweeps and the out the money. All right, those are my filters, and it giving me bearish. I've been seeing a lot of big money players buying puts, guys, a lot. And today the same situation. You got December 20th expiration date 520, 1.3 million premium went into that. We had another one, 3 million in premium for December 20th, 560 strike price. All right, so big money buying puts. But yeah, also remember, big money also selling puts. Now, either these people tomorrow are going to get cooked and the market makers are going to cause a lot of pain to these people, or these big money players know something that we don't know. Either way, the price action is going to reveal the truth tomorrow. Triple Q overall bearish as well. We see a lot of these puts expiring today, but we see some of them expired for the 19th, the 20th, the 18th. Yeah, a lot of these puts expire for today in a couple of days. There is one right here, 450 strike price, over 800,000 in premium. October 18th, 450 strike price. This one, 445 strike price, November 15th. So still seeing big money entering puts. We do see some big money entering calls as well. Of course, 477 strike price. That's expired already. And a lot of these calls were expired today. They were bought today, expired today. We have one call here, 477 strike price, that was expired for the September 20th. Overall, the edge goes to the bears. IWM is bullish. Uh-oh. So this is bullish. Let's take a look at the calls. Okay, we got September 18th for 220 strike price. This is an aggressive one. 230 strike price for November 15th. 1.2 million. So while we're seeing some big money puts going for SPY Triple Q, we got some big money calls going in for IWM. And we got a couple of puts here that expired in a couple of days, September 20th. A couple of calls as well. But look at these puts. November 15th, 211 strike price, 203 strike price for November 15th. Very bearish. And then another call here for 222 strike price, October 4th. So this is a bit mixed, and you guys can see 51% for calls, 49% for puts, both around 2.3 million. So it's literally pretty even. Yeah, not much helpful with that. That's why we gotta combine it with the price action, guys. Tesla overall bullish as well. We've seen a lot of expiration date for September 20th and September 27th. So for the short term, the big money players are bullish on Tesla. And NVDA, bullish for NVDA. 125 strike price for December 20th. Got a couple of September 20th expiration date and one September 27th expiration date. All 125 strike price. Big money short term and medium term, they are bullish on NVDA. Alright guys, thank you guys so much for watching. If you want more content from Uncle Charlie, definitely enter Uncle's Discord. Links in the pinned comment below. And don't forget to like and subscribe. Peace.